Good morning, everyone, and welcome to the Trade Talk podcast. We'll start with global markets and US stock slide as investors worried about anemic data and a probable government shutdown on October 1st. Bonds extended a global sell off after a long time, and the dollar and oil rose. Asian equity futures are in the red. Shares are down because of cash earns more. I meant to say 6 months treasury bill yields at 5.5% compared with S&P 500's earning yield of roughly 4.7%. The biggest such gap since 2000. And that is the reason we are seeing good amount of profit taking in the cash segment in the US markets. US consumer confidence slumped more than expected in September to a 4-month low of 103 from an upwardly revised 108.7. New home sales plunged 8.7% in August due to high mortgage rates. All these reasons are impacting to US equities, and US indices were down heavily on Friday. However, we are seeing some gains for US stock futures in today's date. Gift Nifty is down nearly 50-55 points. FIs are consistently selling in the market, and yesterday also they sold nearly 600 crores. Now if we go through with the setup of our markets, then it was a completely sideways sort of market and range bound formation. So it is very clear that we are going to see furthermore range bound activity or maybe one-sided activity in the near term. It is spending time at specific level. So whenever we see such type of formation, at the end of this particular formation, we see a massive activity on either side. So we need to be very, very careful. On the dismissal of the range, we can expect a sharp activity in the market. 19,590 to be very precise going to act as major support for the market, and 19,750 will be resistance. Below 19,590, the Nifty may fall to the next levels of 19,500 or 450. It is advisable to trade as per the levels because the markets are very clearly undecided or indecisive in the short term. Above 19,750, we are expecting market to enter into a short covering mode. In that case, we may see the levels of 19,850 or 19,950. For the Bank Nifty, there also we saw sideways sort of activity, and eventually 44,400 is going to act as major support. Below that we can expect further more weakness up to 44,100 or 44,000. On the higher side, 45,000, which is too far from current levels, is going to act as major resistance. Above that, the chances of hitting 45,400 would turn bright. Otherwise, we are expecting Bank Nifty to also correct along with Nifty 50 stocks. Apart from that, Nifty IT Index, which was trading above the levels of 32,400, is sustaining above the specific level. However, below that it could fall to the levels of 31,800, and it would turn positive only if it crosses the levels of 32,700. Reliance is down from the highs. HDFC Bank is also very close to its crucial levels. From current levels, the Reliance is having support around 2310 and 2280. On the higher side, resistance would be 2375 and 2400. For HDFC Bank, 1530 is the level to watch out for. Below that, it may correct up to 1500, and in the worst case scenario, 1440. On the higher side, resistance would be 1580 and 1600. So these are the levels for all these major stocks which are not participating or not recovering from their immediate lows. Also, other index heavyweight stocks like ITC or State Bank, they are also trading at specific levels and they are exhibiting some range bound sort of activity. So broadly we are of the view that the market is now turning towards crucial levels, and in the near term we are going to see major uh, trending sort of activity in the near term. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me. Have a great day to all of you.